Recording. There we go. Let's see if we can tag someone. Do me a favor, just share the live if you just joined. I'd appreciate that. And tap that screen for the TikTok algos. Wayne, nice to see you here. Asif, welcome. You guys see, do you guys see the live chat channel? It's just above the live streaming channel. It's a live chat channel. If you aren't talking and you want to ask me something, you can type it out there. For the guys on TikTok, you can type it out in the comment section.
Is it also live on YouTube?
Not on YouTube. I can't do YouTube live at the moment. I used to be able to do YouTube live. Until I get my subscribers back up again, I'll be able to do YouTube live. I was able to do it before until YouTube banned my previous channel, so I had to open up a new one. Okay, most of you who are here know that I use both Elliott wave and price action trading. So every Sunday what we've done so far for the past few weeks is we've done a pre-market analysis on what to expect for the charts or anything that you are interested in for the coming week. And we start off with crypto, and then I'll tackle things like gold, the NAS 100 or US 30, and S&P 500 or SPX. If there's anything else you want me to tackle or talk about, or if there's anything unclear in terms of actual trading or trading setups, you can type it out in the live chat, or you can join the voice and just ask it, no problem. Yeah, Itzy, what's up? I've been looking to tag you. I'm not too sure how to tag someone, so well, you just joined, so lucky you. Okay, for BTC, we mentioned last week that we were looking for either a third drive back up into the level. So we had one drive, a retrace, the second drive which went higher, a retrace, and then we got a third drive at the NPC NFP on Friday. I think it was Friday, yeah, Friday. So we had a third drive up into the level. Now what's interesting to me is we are still overall bearish on the entire market, crypto included. There hasn't been any retrace significant enough for us to say that the bottom is in, or this bottom here is a pivot, which means that we are in a new bull run. There's nothing of that sort happening. We haven't taken out any liquidity to the upside on this move up, and this is not a bullish sort of move. So two things will happen here. We will need to engineer liquidity to go higher or lower. If we want to go higher, we need to take sell side liquidity, which lies below here. And if we want to go lower, we need to take some sort of liquidity on the upside to go lower, right? Now, we have taken some liquidity already on the upside part of it. We've taken the liquidity here and here, like we mentioned previously. So that gave us the move down here. And now for the, if we expect further downside, we needed to have taken some sort of liquidity, which we have taken here on the equal highs, and we've taken liquidity here now as well, right? So technically BTC can go down from here. We did have a fair value gap marked off on the daily level. Now the fair value gap is just an imbalance in price On a daily level, we would see it actually here. The candle that was imbalanced, that needed rebalancing. So that would be from this wick that you guys see here. This wick and this portion here, this wick here. So that would leave the imbalance or rebalancing that needs to be done within the area here. Now you can see that price has come in to that area. We've, on a 12-hour, we've come into a bearish order block, the beginning of it. I've marked it out in orange. Just so the lowest wick and the candle body here. You can see price has come into it. We've marked off the daily fair value gap. Now there's a visible range value area high. I've marked it off here. So what this basically means is, for the visible range, it's basically volume profiling, and the range that we speak about would be everything visible on the screen, right? If we use the VRVP indicator, which is the visible range volume profile, and we open it up, it gives us an indication on where the largest or highest volumes were traded. And in this case, BTC, it would be at the point of control at the bottom here, the red line. This is a high volume node here, and we have one here, but this here is the highest. Now we take so if we picture something like this as the curve, this would be the point of control. So we avoid trading at the point of control, and the extreme ends would be the value area low and the value area high, right? I think what we can do is we actually hit the value area high. Now if you notice on previous value area highs, when you hit previous value area highs, those are shorting opportunities. So if you picture, the best explanation I got was from Adam from Trading Right, where if you have a curve like this and you have the price of an asset, for example, he used the housing market was, say the price of the houses were 300,000 and the market is stable at this price level. And if price had to move up to say 400,000, that means that price would be at a premium now, and people at this 400,000 level here would start to sell back down to the 300,000 level. Likewise, if the price went down to 200,000 here, this would now become a discount or a cheap price for the asset. People would start to buy the value area low back up to 300,000, and that would give you a curve that would look like something like this, right? So you have the value area high, you have a value area low, and you have the point of control, which is considered a fair value for the price of the asset. Same story on every, whether you're using a weekly, using the visible range, using a session. We'll go through all of it now. So this is the visible range volume profile. Basically, it's all of the candlesticks that are visible on my screen at the moment. And I've made the screen such that it is only from the bottom here at 17.5 to the top here. So everything visible on the screen at the moment, that is the range that I want to look at. And you can see we've tapped the value area high here. We've moved away from the point of control at the bottom and the value area low. So this is one of the areas where you would see a pause and consider opening up shorts. So we have a situation where we hit the value area high within a bearish order block and a fair value gap. So this would exclude the value area high out. This would be a ICT short entry setup. If we took from the top of the range to the bottom of the range, you can see it's also at the 70.5% retracement. So basically the ICT entry would be, and I'll show you an example on the US 30. If we have, let's take a look here. So we had an asset move down and then retrace up. We would then look for short entries in a specific place. Let's make this black. And that specific place would have to be a 70.5% retracement of anything above the 50%. Anything above a 50% on a retracement would be considered premium pricing. So anything above the 50% here, in this example, would people would look to sell in this case. And to add confluence, we use the you can use the 65% or the 70.5%. Let's put it down here. Let's adjust this a bit. Like this. And to add confluence, we would look for a fair value gap, which is basically the imbalance in price within that golden zone of 70.5% retracement. So now we have confluence where the market has come back and taken liquidity here into a fair value gap and an optimal trade entry retracement. So if you want to put that into perspective, I'll show it to you now. And this was a short that I actually took on the US 30, and I'll show it to you now, and I'll actually make a TikTok about this as well. So if you went back to the, let's just go back here, sorry. Not too sure if I can go too much forward. Okay, that's fine. Right, so if you can remember, we had the move down here like this, and then price came back up and moved away. So my short entry was I will call it blind, but my short entry was basically this. We took a retracement from the top of the range to the bottom. You can see it's within the 65% retracement, and what we also used was a breaker. So the breaker is basically a failed order block. In this case, it would be this last down candle here that failed to hold and drive price higher. So we had a move down here that took price higher here, and when it got back into this order block, it failed and went straight through. So that becomes a breaker, or a bearish breaker in this case. So now we have a situation where we've got the breaker that I've marked off here within a 65% retracement, and now we need to look for a fair value gap. And if you look at the fair value gap that we find, would be this imbalance here to here. So you can see that when price came back into the breaker, which coincides with the fair value gap, that was where my short entry was here. And our target would be below this low here, or the range lows here. Now I'm going to try and pull that up on the screen for you, just so you guys can take a look at that. Well, give me 1 second. So once we start to look at all of the confluences we need for buys or sells, we need to find a few things. The ICT models, it would be a fair value gap, and a price would have to be at a premium or a discount. And we use breakers as confluence. Copy image. Let's see if I can paste this in. Right, so this was my sell position on the US 30. Now the chart's going to be slightly different, but 32,558, if you look here, 32,558 was here, right? Almost at the top. And if we go to a smaller time frame, the target would be an inducement level. Now inducement is basically would be this level here. So we had a 3-wave move to the upside, which left liquidity lying below it. And once price came back down into this sort of support level, that would be the target, and then we closed the short there. So that was the short setup for the US 30. The long setup, which I actually missed, was quite simple. Once the NFP news came out on Friday, what you needed to have done, you have a order block here. I'm not too sure if we can define it a bit more. Let's just take a look here. Let's use this candle here. This is your bullish order block. And we have inducement, which was created here. So a front run on the level when price moved away would be this level here. At the NFP news, which was at this point here, price drove down, took the inducement liquidity into the order block, and then shot back up. Can you guys see that? So inducement, if you want to know more about inducement, you can look at one of my TikTok videos. It explains the concept, which is basically when you start to see a three-wave, anything that looks like a three-wave move, this level here, front run a level that you were actually looking for. And once price breaks structure to the upside, people start to hop on thinking they've missed the move, and they enter and they put their stops below here. So the market then comes back for those stops into the original level that you would have entered into, but got caught up in the move up here. You get stopped out, it takes the liquidity here, picks up more orders here, and then moves away. That's what inducement is. And you see that here on the NFP setup, and I'll show it to you. I'll show you one on Bitcoin as well. So price came like this, broke structure to the upside, ran the level at the NFP, which took the inducement level here, picked up orders here, and retraced into the bearish breaker and a 65% retracement. And that's where I took my entry and closed at the bottom once it started to exhaust here and not break below this level. Do you think that this is liquidity build up to fall further down, or are you bullish biased? No, this is liquidity to fall further down, ICT. That's all that it is. I'm not looking for this to go any higher. If it does go any higher from these kind of levels, the only thing we would want to see, if it doesn't break down here, is it hasn't really taken too much of liquidity and it's missed this optimal trade entry here. So I wouldn't be surprised at something like that takes this level out here into the optimal trade entry, and then we fall down or break down further here. Right, so we've taken this liquidity into a bearish breaker, but we failed to break the lows or break any structure here, which means we most likely are going to want to come back up here, take the liquidity here, and then roll over. If we do for some reason break over here, then we would have created an inducement level here, which price will come back into, then take this and then fall over. So all depends on whether we break above first or break lower and then come back for it and then fall down. If we break above, would be a better entry in my opinion. I'd feel more comfortable with that, taking it lower. We have a lot of imbalances and levels that were not hit in US 30 in particular, so all of this would have to fall. My overall bias for the time being on the assets would be I am looking for this to actually come down lower and maybe one more move up into this level here, take more liquidity, and then head down lower on the US 30. Decivado, what time frame do you trade? So we would look at from the daily down to a 4 hour, then from the 1 hour down to 15 minutes, and our entries. Let me show you one here on the US 30 in particular. You can take an entry here. So if you missed, the entry here would be like this. You had the move up here. It then broke down, it broke structure here. Price came back into this order block here. I'm going to remove this and this for now, and we'll do it a bit neater. Let's do this a bit neater. Right, so this would be the order block that I would use, and purely because we have an order block at the top here. Right, the last up candle, but you can see that price has already sort of moved into it and mitigated it a bit. So we'd use this order block here, and once we broke structure here, there, so we had a shift in market structure here, you would put your short entry here at the beginning of this. Now the safer entry would be to leave your position at the top there, because you don't expect price to move back up there once it's broke structure here, and then you would target the lows or the inducement level here. In this particular case here, you could target just below that level there. Right, so that was the short entry on the US 30. Now this is going to be all of this. KC, yes, I am in KZN. I am in KZN. So many of you are asking, how do you enter? What time frame do you use? What do you look for? And even for some of my members in my Discord group, there's something called points of interest, which you need to look at. I'm not too sure who that was. Hello. I think it was Aleph. Your mic is on. So there are something called, or there are things called points of interest. So we don't take entries if they are not at a point of interest or at a premium or discount level. So just because price has gone somewhere doesn't mean you should take an entry on that trade in particular. So in terms of points of interest, you would look for fair value gaps, so imbalances in price. You would look at premium or discount levels. Basically what that would mean is from the top of a range to the bottom of a range. Let's look at this. From the top of the range to the bottom of the range, you want to see whether price is above or below the 50%. And if you are shorting, for example, then you would look for price to be at the 50% or higher for you to confirm that price is at a premium level, and that is what you want to look for in terms of shorting. In this particular case, you can see that price is above the 50% level. It's at a premium in this area, considered to be premium or inverted commas expensive. Casey, yeah, that's good to know, bro. That's good to know. Experience, price action, smart money trader. Nice. We must hook up soon. Right. So price being in a premium area is your first point of interest. If it's not in a premium area, if it's anything below here, you don't want to look at shorts, because you know that there's a chance that price will come back into the premium area. Your second point of interest would be the ICT 2022 mentorship model, would be your fair value gap. So that would be a price imbalance that the market will look to rebalance later on. You're worried it might go up before it goes down. Chances are it may go up before it goes down. It hasn't taken, I'm out of these trades, by the way. I'm out here. I don't want to be holding this, especially on a Friday over the weekend, because the market could go higher before it goes lower. So at the market open, you're either going to see maybe a gap down or a slight gap up before it moves over, but we'll take it as it comes. But you're doing sort of dangerous things by keeping this trade open over the weekend. Right, so the market could go up before it goes down. Just to take this liquidity, like I said, so we have the fair value gap as a second point of interest. Your third point of interest would be any sort of breaker, bullish breaker or bearish breaker. In this case, we have a bearish breaker here. A bearish breaker is basically a failed order block. And we could use this, for example, on this particular time frame. It's here. So the last down candle that failed to hold price and rally price higher. So as price moved up here and came back into this order block, it failed to hold price and broke through. So this order block now becomes a breaker, a bullish breaker, because price went higher than the previous high. So this becomes a bullish breaker. If price didn't go higher than this level here, then this block would be known as a mitigation block. Basically what these blocks are, and I've said them before, is when orders are in here, these are trapped traders since price broke through the level. So what the market does is it offers price back into the level for these trapped traders who are long here to exit their position and mitigate their losses. Remember that word, mitigate. So you're looking for people to mitigate their losses back in a bearish breaker or mitigation block. Do you understand that concept? That is simply why price has moved back. So now we have a bearish breaker, 1 point of interest. We have a fair value gap, which is the rebalance of price in this level here for this particular candle. That's your second point of interest. The third point of interest is price is trading at a premium level above the 50%. Above the 50%, which is actually the 65 golden zone at the moment. So we have 3 points of interest to take a trade. So once you start to see at least 2 to 3 areas or points of interest of confluence, you can now start to look at even a 1 minute for your entry, because we'll start to see price exhaust at these levels. So as it moved higher, the structure was bullish. Can you see there? Until we got to this level here in particular. Right, I'm going to remove these breakers again. Until we got to this level where we had a market structure shift or a change of character. Market structure shift meaning the tendency of price was to go higher, and then we broke structure here. As it broke structure, the market will look to come back into a supply level. And what you see here, besides this order block, I'm going to show it to you now. You have another fair value gap on the 1 minute in here. I'm not too sure what you'll see on a 3 minute or a 5 minutes. Let's just take a look. Right, on a 5 minute, you see it here. So price has come into a fair value gap to rebalance. Here.
Hey, sorry, could
Yes.
I ask you a quick question? Do you mind?
You can, no problem.
Mate, I love these streams that you do, and I've just been recently cottoned on to I've been trading for a year, but I'm definitely a novice in that. But I had a question. The way you're picking your market structure is quite interesting in the sense that on a high time frame, the market structure might still look bullish, but when you go down to a lower time frame, it starts to show signals of like a market structure break. On what time frame do you actually care about whether or not that break is like a signal
Valid
or
or
not?
not. Whether the break is valid or not. So in a particular market, so if we are looking at, well, any of the markets you choose this year, right? Any of the markets you choose this year, it's entirely bearish. You agree with that? We went from the
Yes.
Well,
Yes.
if you look at it on a monthly, it's still bullish overall. You agree with that? That point of view. This is
Correct.
still on the buy side of life, right? But
Correct.
occasionally we have the retraces coming in. And market structure at the moment, if we look at it here, is bearish. So the overall for this entire year is bearish. In this particular case, you can see that price has made lower lows and lower highs, right? That's what it's done all the time. And and what it tends to do is, if you take the inducement level into account, So remember I said you get a three-wave move, which creates a level of inducement. It tends to come back and take that level of inducement because there's liquidity lying below it, and then continue with the downtrend or the direction that the market is trading at. Now, we had a three-wave move to the downside here. The market pulled back, but it never take this inducement. Then we had a three-wave move to the downside again here. The market then pulled back, took the inducement, and made a lower low here. So not every break of structure is going to give you a shift in market structure. Many may have been caught at this level here thinking price is US 30 in this example is starting to retrace, and as price comes down into a point of interest, order block, or whatever it is, the price is now going to shoot up and make new highs. So for me, in terms of market structure, you want to see an inducement level or previous high or old high being taken before price breaks down to a new level. So basically we call that an inducement level. Just want to get my there we go, right? So that would be an inducement level. Price came back and took it before it made a lower low. So in terms of me marking out market structure, I would then call this entire move here one leg, because there has not been a previous leg back up that has taken any previous highs in this range here. So for me, from the start of the move to the bottom of the move would be here, and this was the leg here that took any retracement or inducement liquidity here before going lower here. So my market structure marking off in terms of this would be this here as the beginning, this point here, only because we had a retracement here that has taken a previous high here and then made a lower low. If it failed to make a lower low, then the chances are that this could not be the top here, that we could have had price retrace here, then go higher, then go lower. Then this would have been the lower high that I'd consider. So for me personally, the inducement levels are what you need to be looking at for to mark your market structure out.
Yeah, awesome. Thank you.
Right, because let's go a little bit lower here and let's use something else.
I generally find it interesting when I'm going between 4 hours and let's say 1 hour, and then trying to look for signs in the 15-minute or something. This is like obviously day trading situations, but there's a lot of mixed signals there.
There could be a lot of mixed signals. If you want to know what the character of a market is, start at the top, right? Start at a monthly and go down. So let's go to a monthly here on Euro USD, for example. Sorry, let's maybe try a weekly. The weekly work, yes. Yeah, right. So if you notice here on the Euro USD, we're in a downtrend clearly from the top here, clearly, right? Price on the Euro USD has tended to come back to the order blocks, whether it's a weekly, monthly, or daily. In this particular case, it was a weekly order block and then rolled over. So that is bearish momentum on the Euro USD. It also has done it here now recently, where we've come into this level here and we sort of saw some a pause here. Now on the lower time frame, what I do expect for the Euro USD in particular, let's have a look here. For the inducement levels, the level I would use is the last high before the break of structure. So if your break of structure occurred here, for example, on this move down, then your last high would be here as the inducement. Now we can't look for any sells in particular until there has been liquidity taken or inducement liquidity taken. So until we want to see price go lower, we need inducement liquidity, which is this level, to be taken. And once that is taken, we'd start to look for sells. So since it was taken here, you could see the reaction off of it here. Can you see that? Once it took the liquidity at the inducement level, it moved hard. Now, we wouldn't have even looked for sells here, even though price did react off of here. There was no previous high taken. Price moved into a shelf here, reacted off of it, and then later on, what did it do? It took liquidity above here and the
Can I
inducement
ask
liquidity.
a question
Yes, sir.
about it?
Yes, sir.
Sir, if it's created inducement, so it's go to down like, and then we can buy for up position.
You're going to buy up position only once you see a change of character or break in market structure to the upside. Now, for this particular case here on the Euro USD, let's look at a 4 hour, right? The character or shift in structure was to the downside here. Now, what could have happened here? There was an inducement, there was a break of structure here, and your inducement level was here. So when price came in here, you would have looked to sell here with a stop above here. You agree? Because the market structure was down. Now this particular trade would have stopped you out, and it's okay to be wrong, because when you are wrong in this particular case, then there's a chances are we can take the other side of the trade and be right and cover up whatever losses that we did have. Now in this particular case here, once we saw this happen here and a shift in the market structure, which happened here, do you agree the market structure shifted from going down to going up?
Yes.
Then what do we need to look for? Our first point of interest would be the order block. You agree?
Yes.
On a particular time frame, we are looking for the last set of down candles or the very last down candle before the move up. We are also looking at bullish breakers, which is this block here. You agree? It's a bullish breaker because price, just like I showed you on the US 30 just now, this order block here failed when it came back in here.
Is it how to its point of it's a breaker like?
How? Right. So let me show it to you here, right? Let's come back here. We didn't know price was going to go up. You agree? At this point.
Yes.
We didn't know. But what we know is when price comes back into an order block, we are going to sell. So price came back into this order block. We sell. You agree?
Yes.
Just like that, when price comes back into the order block, we are going to sell. So price broke structure here. We are going to look for price to come above here or at the extreme order block, which is up here.
Yeah.
Or the inducement level, which is just above here. And then we are going to look for sell positions. Now we can see that price didn't do that. Price broke straight through the order block, which was here. I'm gonna mark it off a bit better for you because it will actually be here. This entire block here on this level is the order block that failed. So that would become a breaker now. This entire order block. If you go down to a lower time frame, you can refine your order block down there as something a bit smaller, which would be here. Now, what also we have in here is fair value gap. So we have this order block here. that failed to hold and drive price lower. Because we broke structure here and the order block failed to drive price lower here, it becomes, in this particular instance, a breaker. A breaker block, meaning it broke through, it failed. After a price went lower, it failed to hold and drive price lower. We will look for this to be a breaker block. When price comes back into the block, people who were short here to drive price lower here are now trapped. When price broke through it, they are going to look to take their sell positions and do what? They're going to buy. They're going to buy back their sell positions. You agree?
Okay.
So your last down candle or up candle in this case became a breaker block where people are going to mitigate their losses. For those who have sold here are now underwater, and price didn't go down, price went up. So we had a shift in market structure which gave us this bearish, a bullish breaker now. When price comes back into the level, people are going to mitigate their losses and drive price higher. You understand that concept?
Yes.
Now, besides that, besides the bullish breaker, we'll mark it in blue. We have a fair value gap within price, which was here. Here. And here. We also had a fair value gap below here and one below here. So these are all levels or points of interest. Now let's just take a look at this example here. Let's see if it works out. Right, this was the 50%. You agree? Let's take the breaker out. This was the 50% level here.
Okay. Yeah.
Price breached the 50% level. And in the bullish case, it makes this level discount, which means it makes it cheap. So people are going to want to buy below the 50%. So now you have price coming in below the 50% in a fair value gap in a bullish breaker. Those are 3 points of confluence for you to enter a trade. You agree?
Okay.
And your stop is going to be below here. Second entry,
Yes.
price broke structure, came back into this fair value gap here. You see it?
Yes.
There. And then went higher. Now all of this created liquidity in the market here. It created, as price kept going higher and higher, it created liquidity here, here, and here. Because as price went higher, people started to put their stop losses here, here, and here. And what did the market come back and do? It came and took their stop losses here.
Yes.
And then continued higher. So in this particular area here now, how will we look for market to go back up? We don't know. But what we do know, this created equal lows here. At some point in the future, these lows are going to be taken because the market does not leave equal lows or equal highs behind. These are considered to be poor lows. Itzy, these people are in my Discord. You need to join my Discord and you'll also be able to talk on the live. Right. So any equal low that you see here these are considered to be poor lows and there is liquidity resting below them, the market will come back and take this liquidity later on. Just like you see equal lows here, market will come back and take those. Now in this particular instance here, once price came back into here, we have something called displacement, a violent move up, which broke structure, change of character here, and shifted the market structure to the upside on that case there. So when price comes back into the order block here, with this being your order block, you are going to buy with your stop below here, and you are going to target previous high or previous consolidation. So that was your first entry. Second entry, you have created a level of inducement. There's that word again, inducement. Here, where people who entered the trade here have placed their stop losses here because the market broke to the upside here. They do not expect price to come back lower than this level if price is going to go higher. But this is a smart money trap, because smart money knows that retail is going to put their losses, stop losses below here. Once you see a break of structure here, you have three waves up to the upside, breaking structure. Retail will put stop losses below here and expect market to come back into the level, which it did here.
And expect market to come back into the level,
second.
which it did here.
Sorry, give me 1 second.
And expect market to come back into the level, which it did here. Sorry, give me 1 second.
There we go. Sorry, my alarm went off. It started to open up my TikTok live. It gave a false move to the upside, and then it came and took the inducement level. Now we're going to see it here. Just look at these. This low here was taken even by that much. You can see it here. It took the liquidity it needed here and then reversed. So these are entry techniques that you will use. You will use your high time frame points of interest. You are going to use a fair value gap. You're going to use your fib retracement tool. You're going to look to see where the price has come into a. I just want to have a look here also. 1 second, right? Let's take this.
Sorry.
Yeah, I'm listening.
While you're doing that, I was curious to hear how much stock when liquidity engineering moves that is going to a point of interest.
Sorry, you're breaking up.
How much stock do you put in?
You're breaking up there.
Can you hear me now? Is it better?
I can hear you. I can hear you.
Okay. So when price is going into during liquidity engineering, when price is going into points of interest, how much stock do you put in counter trading RSI? Because you know there's going to be a lot of people looking at an RSI level to reset.
Yeah.
How much stock do you put in
Nothing.
counter trading it or trading the RSI?
I don't put any stock into what an RSI is doing, what a MACD is doing, or what anything else is doing, to be honest with you. I'm only let's look at this particular instance, right? I'm only interested in, has price come into a point of interest for me to take a trade? Meaning fair value gap, breaker, PD array, your 50, anything below or above a 50%. That's all I am interested in. Once I see that, I don't usually take the entry blind, because if you did here, your risk would be far away here for your stop loss. You want to look for a reversal after the move has been done. I usually look for that on a lower time frame. You would find an even better reversal, and I'm going to show you something that we took on gold, and I'll pop it up onto the I'll pop it up here now, right? And this was with my private Discord group here. Now, for weeks and weeks, we've been marking off the level and charting the level, and Slotman and the rest of my guys here would confirm that. We had a break of structure here. At this level here, we were looking for price to come back into the order block here. And once it came back into the order block, we were looking for reversal signs or changes or shifts in market structure. Now if we go lower, we had a shift in that market structure here. You agree? Market was going to the downside here. In fact, the shift came in, the shift came in here. The shift came in right there. Price went higher, created the level of inducement, like I said here, came back, and I think this was around NFP or just before NFP. The market went up, took liquidity here, and shot back down. Now when it shot back down, remember at this point we're looking for entries on gold here, and the stop loss that we are looking for is nothing lower than the original, which is here. The original low is here. Now I'm not a fan of what's happening or what has happened on gold in terms of all of these relative equal lows, right? But we'll come back and talk about that later on. What was happening here?
Was that also range value low?
Was that also
range value area low of the BPDR?
It could be. It could be. I didn't check it, to be honest with you. It could be. I had these levels marked off. I'll just have a look at the Discord quickly. It probably was at the point, but I've taken it off the chart now. Let me just see something here. It was actually a naked point of control, which was basically a previously untested level on a daily chart, daily chart, right? And it was in a M30 fair value gap. That's what I had in the. It was a value area low. I'll try and pop that up here. Hold on.
So when you have good confluence, what I'm hearing is like when there is enough good confluence, you're not really looking to counter trade RSI.
No. Morgan, I'll go over it now. So this was my picture from the Discord, right? You can see that we had various naked points of control here, right here, here, and here, and we had a value area low, which you are correct in saying here. And we had an H4 fair value gap in there as well, right? So that was where all of this happened. Now let's look at this now, right? As price came back into this level in the Discord, let's look here. Right, so this was the first chart that I posted, and this was on the 5 minute, right? So we're on a 5 minute. Let's try and get this to match up.
It kind of also looks like the Fib 786 replacement, right?
Yeah, it may be even lower. It went pretty low, to be honest with you. Right, so this was from my Discord here, this chart here. We had a break of structure or shift in structure, change of character, and then a break of structure, right? And we had a demand zone down here, which I marked. Then the the long entry was here.
Yeah.
Right, you see that? Tight stops, and that's exactly what I said. Tight stops. Then I said once we get a second break of structure, which was going to happen here, if I'm not mistaken. Yeah, here. We'll look for a pullback into another demand zone and we'll take it. Let me go back. Copy image. Paste it up here. Sorry, not this one. I'm looking for copy image. It was here. No, why is this not doing this? Hold on 1 second. Copy image.
It's all good. It's very cool because like I've usually traded market structure like very cautiously, but I have obviously looked at that as like the overarching picture.
Yeah.
But I'm usually going off like the range value, and I kind of like looking at those things. But
Yeah.
this kind of inducement level is new to me, and it's kind of quite interesting.
Yeah. So if you find me on the Discord, just come have a chat with me, and I'll point you in a direction that will teach you more about inducement.
Yep.
Right. So at this particular point in gold, we were looking for the second break of structure here, and we had the second entry. So we had the first entry around here, and then we were looking for the second entry here and looking for the second break of structure there, and this happened very quickly on gold, right? If you look what happened next, price came back into the demand zone in a second. So we had the second break of structure here, and price popped back into this demand zone within a second, gave us a second entry and moved away, which you saw, actually saw here. So I actually bought gold at about 16, almost 16.19. And this is where it is now, 16.80.
Yeah, awesome.
Now, the entry techniques. Look, there's some sense of, or it's not going to be for everyone, because there's always a fear that what if it goes lower, or what if it breaks, what if it stops me out? That's always going to be the case, right? There's always a chance it stops you out. But when the setup presents itself, you can't not take the setup. You understand what I'm saying? If the setup is there, you have to take it. It's as simple as that. If we had, if this area here gave you confluence previously that I am going to long this area when price comes back into it, and then suddenly price came back into it, now you're a bit cautious. Why are you being cautious when price came back into it? You said that it's like people and Bitcoin. Oh, when Bitcoin goes to 3,000, I'm going to buy a ton of Bitcoin. But I guarantee you, when Bitcoin, when Bitcoin goes back to 3,000, no one's going to buy it there. No normal retail guy is going to buy it there for the fear that it's going to go even lower. And that's where you want to be trading. You want to be trading when there's blood on the streets, because that fear from everyone else is what's going to reverse the market or turn the market around. So just the simple change of character here, break of structure here. This could have carried on rallying up and you would have totally missed everything. But the market decided to offer price back into what we call the order block, right? And this is the extreme order block in this case, which is the very last down candle. And then it broke structure again. Now you got lucky here when price broke, changed character here and offered price back here. You're never going to get so lucky all the time. In this particular case, you did get lucky. And this is all signs of exhaustion at the bottom. So when the setup presents itself, there's always a chance that you are going to get stopped out, but you cannot not take the trade or the setup when it presents itself. It's one of the rules.
Yeah.
Simple as that.
That is cool. This is cool. Inducement levels and looking at that in context of like market structure, this is very cool.
Especially, see, look here for gold, right? This was the breakdown. This becomes the inducement level. The inducement level is always the last high or retracement before the break of structure. Simple. That's the simplest meaning you're going to get to that. The last high before the break of structure. Price is going to want to come back. If you are looking for sells, that is the level you want to be trading at. Now, it didn't engineer any liquidity. Okay, fair enough, we took some here, but that didn't give us much of a much. When gold does this, and takes this liquidity, then I'm interested in what level that is. And Morgan, if you're still here and paying attention, we are going to take our fib retracement from the very top of the move to the very bottom of the move, and we are going to see whether this let's go back to normal fibs, whether that level, where the level of inducement is above the 50%, which it is. It's actually at the golden zone up to the 70.5%, which is the optimal trade entry in terms of an ICT model. And that is where we are going to look to enter. If at the time we go on to a higher time frame, maybe there's going to be a fair value gap in there, which we can most likely see here, right? Small fair value gap there, or you want to call it even bigger, you want to call it a volume imbalance, which is basically left wicks behind between candles. That would be a volume imbalance there at the 70.5 retracement at a series or set of bearish order blocks there. So now we have volume imbalance at the 65% above the 50% retracement. We have a volume imbalance, we have a bearish order block, and we have it above the 50% at an inducement level. There's your fourth one. Why would you not look to take a trade down there? Or up there, sorry. So if price goes into here and then starts to break down, you want to be looking for a trade or retrace back into the level that targets not these lows, right? We're going to target these lows but below them, because what this has done now on gold, it's left poor lows behind or relative equal lows, and that's never a good sign. So if we want gold to reverse completely, I would ideally want to take the inducement level out here, run these lows here, grab the liquidity from stop losses that have been set below here to take this move up, because people are going to want to long a retrace here. You'll get a false move coming in here, which will cause people to set more stop losses below here, and the market will run them here, and then it'll go up. So can you see how the market starts to engineer liquidity?
Yep, that's cool.
It's a crazy thing, yeah. So I did tell my group that I'm going to talk about high time frame points of interest are very important. When you see a breaker, whether it's a mitigation block or bullish breaker, bearish breaker, it needs to be above the 50% level, 65%, 70.5%. You need to look and find whether you can see a volume imbalance or a fair value gap within that level, and an order block. If it's a short, you're going to look for a bearish order block, you're going to look for a fair value gap, and you're going to look for a bearish breaker. That's what you need to be looking for. Let's take
Thanks, mate. That's awesome. Thank you.
No problem. Let's look at something here really quickly before we move on. Right, above there's your bearish breaker here. Let's say none of this happened to the left, to the right side of it. Right? We're only interested in what happened here. We had a breaker that was above the 50%. We took a fib tool from the very top to the very bottom. That puts us above the 50% into a bearish order block. So we have a breaker, a bearish order block, and I'm sure we can have a volume imbalance or fair value gap within here, which is basically here. This was a volume imbalance there. So you had three areas or points of confluence at the time here. Once price start to break down, you could have entered, or you could have entered there with a stop above there and target the lows. So that would have been a short entry. But now we still have this inducement level or relative equal highs that have been left behind here. So we want to be taking these, then this, and then look for a reversal on gold. I did want to see a reversal from gold around here, but this little wick down here that left even more relative equal lows behind gets me thinking that if we do get a retrace into this order block here, that's a long. Target the inducement level and relative equal highs here. Look for a breakdown here just before the lows. Look for the false move up, then the run, then the actual move.
Hey, boss.
What's up, Sloth?
So, yeah, we've got elections, I think, on Tuesday, and then we've got CPI next week as well, right?
Yeah.
So, all this fuckery you're showing on the chart, it makes perfect sense, right? We're going to see a lot of whipsaw
We
action.
are going
So,
to see a lot of whipsaw action.
for those of you who are new, pay very close attention to what Poison is showing you, because he's a genius, man. It's, these levels will be hit, right? So you can't be scared because they're probably going to be hit with very aggressive moves, and then they'll immediately reverse. So like that gold wick he showed you that came right back into the demand zone, it's gonna happen like that, right? There's gonna be a lot of news and reason for volatility this week, so things are gonna happen very, very quickly. You've got to be willing to shoot your shot when it comes.
That's exactly
So-
it. You're gonna need to shoot your shot when it comes, because look, people don't like the term retail, institutional, whatever. We don't care. If we are trading, like I said, when there's blood on the streets, that's where we want to be. We want to be entering where stops are being taken out. When other traders are being taken out, that is where we want to be entering. Because in order for us to win, someone has to lose. That is the balance of trading, right? If we're winning, that means someone else is losing, because they have bet on the other side of the market happening. So for us to be buying here, there are going to be breakout traders that are selling here. So we are going to, the market will give you that, like I said, give you that false move to the upside here, create more liquidity here, people thinking that it's going to do that, run it down here, take the relative equal lows out, then reverse. So now we are fucking both sides of the market in terms of we're taking out the breakout traders here who are going to see this as support, a strong level of support, because it tapped 3 times. It must be the strongest level of support there ever can be. I mean, how many more times can this thing tap? This thing is indestructible. It's never going to break. But what's going to happen is these are false creations in the market to engineer liquidity. And once that happens, you're going to get breakout traders who are going to laugh at these traders for thinking this is support, and have sell stops going down here to look for that move, and then the market's going to reverse that way and carry on going higher. There's your other inducement level here on the higher time frame, which basically was the high before that break of structure. So that's something we would look at targeting on gold. Right. If you start to change your mindset from where I can buy or where I can sell to where is the liquidity and where is price most likely to go to fuck a whole lot of people up. That's all that it is. Where can the most pain be had? Is it to the upside or is it to the downside? Once you start asking yourself that question, you'll be better off. Start to sound like Andrew Tate, and then you'll say that you guys will start seeing outside the matrix. Right. Now, having said that, and a whole lot of news coming into the market, let's just recap really quickly. BTC hasn't taken any level to the upside, and if we are to expect BTC to go to the upside, if it does it now, that's going to be interesting. We'll be looking at 2930K. Right, this level in here. That means it would have taken liquidity above here and then fall down. For it to go higher even, it needs to take more liquidity to the downside. My proposed plan for BTC, and I'm going to pull up the distribution model chart for you guys, is we either create this trendline liquidity here. I'm going to mark it off a bit cheaper, but neater, sorry. All right, whether this comes in terms of relative equal highs, so an equal high to this, or trendline liquidity this way, whatever it is, my proposed plan for BTC is there is nothing to indicate that BTC has reversed from the level here. This is someone defending this level to take it to a point, but with all of the news coming out this week, and especially with that FTX saga that happened this weekend, and claims that FTX exchange is not very liquid, I expect that to turn out to be one big shit show, where an illiquid exchange will need to sell something to stay liquid, because they are sitting with a whole lot of shit coins that are illiquid that they cannot sell, which is affecting their liquidity. And with the saga, and we saw Binance dump a whole lot of FTT this weekend, it means at some point, if FTX wants to buy back all the FTT or stay liquid, there may be I'm not saying that it is, there may be a point where they start to sell their BTC reserves. That makes sense. I'm not saying that's something that could happen. If that's the case, my proposed plan is the in-between plan. So it's not that BTC goes up and then goes down, right? It's that we create this trend line, engineer this liquidity here, which is front running basically this entire level up here that people expect it to go to. We head down lower here to about 14.5. Once we get to 14.5, we now see a move like this. Forget what happened everywhere else. We see a three-wave move to the downside that has created an inducement level here and here, which the market then comes back to take into this bearish order block here. So we take the liquidity lying above here and the inducement, and it gives you an Elliott wave flat type of structure here, ABC, and then the market heads down lower. So that's what we will be looking for on BTC in particular. And I'm going to look at the sell model that I did chart out, and I'm going to post it up here now again. Probably be the third week in a row we're using this pattern, but it's everywhere, right? Right, simple. You see price, let's move this way. You see price create these relative equal highs or trendline liquidity here. Then you see a break of structure here, here. Price will pull back into a fair value gap that was created here for the first leg of distribution, go down lower, break structure, pull back into a second leg of distribution or fair value gap, and then head down lower to the actual point of interest where there are willing buyers, and then reverse. So if you look at this again, it means that with these relative equal highs, we don't see it go straight down. We probably see a situation where if it does go down like this, we get the first leg of distribution coming in here. We see a breakdown here, a pullback into here for the second leg of distribution, and then the final leg down here before the reversal. Okay, that is the plan for BTC, whether it creates the trendline liquidity or relative equal highs here. Sol really quickly posted this in the Discord. We had an eye on this level for quite some time. Just want to go back and see how far back did we have this level marked off here. Right, so we had an eye on this yellow level, which was an H4 fair value gap, an H4 bearish order block, and a naked point of control just above around the 38 level mark. If you look at that, that's exactly where Sol came into. In terms of market structure, what we were looking for on this particular time frame was a high, low, lower high, lower low, lower high, lower low. Now, I do have members in the group, and I won't mention names, that have taken this short and are in profit purely based on the chart that I've posted and the fact that it has taken liquidity in this level, which was a fair value gap, bearish order block, and a naked point of control. Now, in terms of the naked points of control, all that it is we use, if we're not using the visible range volume profile, which, like I said, shows us the visible range, the value area highs and lows of whatever the visible range of the candlesticks that are on the chart are. I will then use another indicator called the PVP, which is the periodic volume profile. And with the periodic volume profile, you can set it on a daily, a weekly, or a monthly. And what this gives you, it gives you, in this case, weekly levels, right, in terms of value area highs and lows, and naked point of controls. When we say naked point of controls, it means the red levels that are naked, that have not been touched. So in this instance here, let's have a look here. We had a session from here to here, which left this point of control. This becomes a naked point of control here because price has not moved back into it before moving away. Just like this becomes a naked point of control that we are in now, and price will most likely come back into it and see a reaction. Now you can see from the volume data here that these are not very good highs. These are poor highs. All of the ones in red, not a good place to be trading. Not a lot of traders active or volume present in the market there. So in terms of the other levels that I look for confluence with, would be the weekly volume, periodic volume profiles, which gives us the value area highs, the point of controls, and the value area lows. If they are untouched levels, that means levels that price has not come back into. So we had this session here, we had a periodic naked point of control here. Price came back into it in the next session and then shot up. So if you had just taken a trade here based on it hitting that naked point of control into an order block, into a fair value gap, and all of that would have been a good long setup. So that's the periodic volume profile that we use, and you can see that on a weekly, and you can even set that to a daily. It will give you daily levels. So these are the daily levels of each session and their point of controls, value area highs and lows. So if you set that, each candle is 1 day here. So if we look at it on this level, the reds and the blues, let's just go down one more. All of these would be areas. So I would then, once I put this on, I would look for areas and point of controls that have not been hit. So for me, this would be a point of control. What I then would do is I would take my little marker and place it here. So I know when price comes back here, I can expect something to happen. Just like this is a naked area or naked point of control, I'd put one here. We would look for any other ones, and we have one down here that I mentioned, which you can see here. So these are the levels that we'd mark off and look for points of control. So as you move along, and we use the visible range volume profile, we use the PVP, we even use the volume weighted average price, the VWAP. You can see it's bouncing off the point of control of the VWAP. If it fails, it will traverse from the value area high to the value area low. So now this gives us a level in here, which is called a VWAP point of control, or sorry, value area low. So together with the fib retracements, fair value gaps, breakers, all of that, we're using volume profiling to add to the confluence of all of our trades. So now as
Hey,
price,
can you look at the weekly chart here for Sol?
so no problem.
So I typically use the Binance charts, and I don't know if that's a mistake or not.
No,
but
I'll switch over to Binance. Let's have a look. USDT. I don't know why
Yeah,
I'm using
weekly chart.
FTX, to be honest with you. I think it may be because it was calculated. Let's see, USDT Binance there. Right. Weekly, and we want to go log. Let's go here and auto. Right. Talk to me.
So so a couple of things. So one thing, so if you look at those both of those wicks, right, we almost left equal highs, but we fell shy of it by about 15 or 16. And then same thing for that weekly order block, right? We didn't quite hit it. My assumption is we're probably going to come back a little, like maybe make one more stab up a little bit higher from where we are.
Yeah.
But how do you think this will end up playing out in terms of, like, I know people are short. You think we would, right? So yeah, right there, and then that order block is like 15 cents.
Yeah.
That's where that higher wick is,
Right.
the bottom
So,
of it, right?
like you know, or like I always say, once you start to see things like this happen in the market, right? So let's mark that extreme order flow order block, which we inverted comma
Exactly.
missed, right? Let's say we missed
Yes.
it, right? Wink, wink, we missed it. And let's go down to a lower time frame. What is this creating in the market at the moment? It's creating inducement.
Liquidity.
It's inducement.
Right.
It's creating inducement. That's all that it's doing. This is the exact definition of inducement. If you think about it, inducement will happen, and like I said, it's a front run on price. What is the definition of inducement? Inducement is something is something that causes someone to do something, right? In this case, this inducement here, which was a failed rally into the bearish order block, and price moved away, creating new lows. So let's not worry about this one in particular, right? Let's not worry about the second wick. Let's worry about the first one. This level was a front run because it made a new low. That was the actual inducement, which means that this rally could very well take this out.
Okay. Yeah, and that's exactly what I'm saying. Because I think for those on the call, I think if we get another stab up a little bit higher into that red, or like right, there's going to be a better short.
It's going to be a better short opportunity, correct? Right. Yeah. I just want to go up one higher. It's too high. Too weak. Too much. So we were on the daily. Let's have a look at 3-day. Just want to get a slightly clearer picture. Yeah, right. So we can then reduce this to up here. As the extreme order flow order block. Now when I say extreme order flow order block, it's the very last candle up or down before the move away. That's the extreme order flow order block. In terms of ICT's order block, it's the last series of up candles or down candles. So he would consider this entire series of up candles as the order block, not just the very last candle. In that case, we have a trend line here. You can see that's where it hit. Now we also in a fair value gap in here. But I'm not a fan of the equal highs that will be left behind here. So which means
Yeah, that's exactly my thought, right? Is we're gonna whipsaw here, we're gonna go down a little bit further, come back up, take those highs, probably run into the red level.
Yeah, because if you think about it, yeah, besides this was the actual inducement level, so it can and it can't, right? And if this was the inducement level here, we've taken it, we're good. We just need to see good enough displacement or breakdown on the lower time frame to say that we are going down lower. Now if we go back to, let's think about it on a slightly bigger picture, Sloth, where we leave this, and this is what I was actually talking on BTC, where the equal highs. BTC was actually at about this level, which gave it that sort of trend line, right? But I wanted to see BTC, and if BTC does that, then you'll get this on a Sol. So we have those relative equal highs there, and if we just up our mindset just a little bit and think slightly high time frame, wouldn't it be better if we did something like this, then take all of this and then head lower? So that's an even bigger inducement.
Yeah, and I think when we did an Elliott wave count, that was actually your idea was 39.
Yeah, because in terms of
39.
Yeah, in terms of an Elliott wave count, we looked like we had 5 waves to the upside, and now we are looking at 1, 2, 3, A, B, C, wave 4, wave 5, right? Then
Correct,
we
yeah.
get a bigger move up here, A, B, C up, and then we get 1, 2, 3, 4, 5 in there. Then we can look to buy Sol for the much larger account. So I wouldn't put it past Sol making this flat type structure here, then head down, taking some liquidity just below here, right, to the left. If we look at that to the left, just taking these relative equal lows, because that's what we can call them, right? This ton of liquidity lying here, we take that liquidity.
Yeah. And I've got the 0.5 of the entire move at 16.44, right? So anything below there ends up becoming a value.
Yeah. So
Buy for the B wave up.
yeah. 16.44, is that what you're saying?
Yeah.
Around here. Yeah. There's a shelf in here. There's liquidity lying below these equal highs here. Equal lows here, sorry. There's equal lows here. There's a shelf in here that could pause price, which is, let's have a look here. At the 50%, yeah, it works. You'd be silly not to buy Sol when it moves down here, because whether this is a B wave here or whether this is a completed move here, you'd be silly not to buy Sol at these levels here at 16 or 15 or whatever it is here, because chances are, if things start to get even more bullish, that we make a higher high here and then a higher low here, and then we just shoot up in the future here, instead of going right down to these $5 and $6 levels here. Crypto is known for that. So when Sol comes down to that level 15 or 16, definitely buy it, because at that point the upside potential is more than the downside. So all depends what happens here, right? If we get that nice little liquidity engineering here and then we run it, because this would be a nice sort of shelf in here. Run the stops and then run higher. So I'd wait for that. ETH starting to look like a 5 wave. Or was it ETH? Yeah, looking like 5 waves completed for some reason. Whether that's an ABC or just a C, where we get 1, 2, 1, 2, 3, 4, 5, 3, 4, 5. Or whether this is just the third of the fifth and we get one more stab up, creating the fifth, displacement, retracement, level down. So flagging enough to maybe want to come in and fill up here, 1706, 1707, and then move. But without displacement we won't be looking at any shorts, but these are certainly places of interest. ETH especially has not so ETH came into the bullish bearish breaker here, moved away. Ideally I would like to see it take up the inducement level here, or like BTC create this level here. ETH doesn't make new lows, or maybe it just nicks here, comes back here, does something like this, and then rolls over. So ETH stuck between 2072 and 820, massive range, but will get taken, run at some point, and then a reversal on ETH. So the week or two that is coming up is very important. Right, we've gone through the US 30, gone through Bitcoin, Sol, Ethereum. Most of the cryptos will just follow what BTC is doing, so pay attention to BTC. In terms of US 30 again, like I said, I did short here. Price failed to go lower. We took inducement liquidity here, so I would not be surprised if we get a, so like I said on the weekly or daily profile, if you are bearish, then what happens is price goes up, taps your level, and then starts to bleed down, because then we would have taken liquidity here at the optimal trade entry, and your candlestick would then start to look like this, would leave a wick behind, and that would be your body, and then that would be a wick to the downside. So what that means is we get that move up, creating the wick, then the body, running the lows, and then retracing and closing off, right? So there, 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 there. That would be your candle. Yeah. What else do you guys want to look at before we shut shop?
I'm generally bearish on everything, right? Same thing as you, I believe. But only one chart that actually at least
looks bullish.
Maybe for about 100% move, CHZ. So there's this whole World Cup narrative, right?
Yeah.
I've got the 702 and the 786 between about 45 and
what is it?
56 cents.
CHZ or CHZ?
Yeah, Chili's.
That's it, yeah.
Whatever the hell. Yeah. So it also, so Quant, remember Quant, right? Quant had this very same look on the weekly chart. You've got this massive inverse head and shoulders.
Yeah.
And then the Bitcoin pair too is retraced higher than almost at equal highs, but it's still got another 20-30% to go to get to the equal high.
Yeah, so
we're not at a critical level. It's just structure when you zoom out.
It looks like it does look like that, right? It looks like the inverse head and shoulders happening here, where we're about to take off. Possible if the narrative is is there. In terms of anything bullish, yeah, possible, but what I am actually seeing here is something called the power of 3, right? Where you have, especially at the top, because what happened actually here, you had a break of structure here, but price went higher here. So now it's giving you that sort of 3 drive into a level. And what actually ICT calls this is a power of 3, where you have your accumulation phase here, and then you have a manipulation phase next to it, which could go higher. And then next to it, you get something called the distribution phase, which does that. So I'm not too sure. It's starting to look exactly like that, especially because it created a false break of structure that then ran the highs again. I don't know. The World Cup narrative thing and whatever's happening here, maybe there's something there. Maybe. I'm not sure.
Right.
Charting these shit coins is a schlep. But if I had to put if anything here, let's look at it from this point of view. And when you look at it like this, it looks like everything below this level was a deviation almost, right? Like this is the actual level. It ran the level, came back, held above it, and now it's looking to go higher. If it is looking to go higher, fair enough, then where is it looking to go to? Because if there were buyers here, where are the orders going to get hit? And it's going to get hit here. So that's target 1. And here. And then obviously the highs. If that's what it is. So worth taking a stab at it, I suppose. Right, run break of structure here. Yeah, worth taking a stab. I'm not too sure if it gets back down here. If it does, you'd buy
Yeah,
it.
because based on that break of structure you just drew, right? Like that dip down to the support would be inducement or grabbing liquidity from those inducement levels, then, right?
Yeah.
So made a higher high.
So this created the inducement here. This grabbed
Exactly,
it here.
yeah.
This grabbed it here, and then
Yeah.
it's given us that move up there
Moved away.
to tackle these relative equal highs here. That's going to get taken into this order block here, but this is more liquidity than order block, because so it may just run it above there, which is a decent move in any case. So I wouldn't mind. I wouldn't not take a step.
Yeah, I've got a position. I mean, that 45 to 56 thing, that range you're looking at is
Yeah,
my key level, and I'll just kind of hold and watch there. So
yeah, because there is some imbalance in here that it's gonna want to
Right.
try and fill in there.
yeah, okay.
All right.
Yeah, it's worth it. I mean, I'm 90% cash anyway, so might as well take some
Yeah,
plays
now
in there and
is
just.
not the time to be buying anything. To be
Yeah,
honest,
exactly.
everything looks like shit. And I don't know why. I mean, for you, if you think about it, to get bearish or reversal on something, your sellers or the sell side has to be taken for liquidity in order to change position or swap hands to buyers. And if you're not getting run of any equal lows or old lows, then where is that liquidity coming from? So I don't understand why people are super bullish on crypto or Bitcoin or whatever it is. No matter what the narrative is that has been building, the structure or the market, once the Fed starts to pivot, that's when Bitcoin will bottom. So when monetary policy changes, that's when Bitcoin, and Bitcoin will be the first to bottom when that happens, and that's when you're going to start to look for positions or closer to the time. Right now everything is a bear rally, so all you are doing is looking for important levels, equal highs, equal lows, fib retracements, fair value gaps, all of that in order to sell lower. That's it for tonight, guys. We'll catch up tomorrow again on some of the whatever news happens this week. We'll try and do a stream in the evening and look more into Bitcoin, and then I'll do an update because I'm actively trading the US 30. Let's have a look at the S&P just before we leave. Again, you can see that the S&P did exactly what the US 30 did. It came into a fair value gap and a break of some sort. And what time frame is this? Let's go higher. Right, came back into a fair value gap and a breaker. We can call it here. So, and that's why you had the move down, but what's getting me is the buyback, the big buyback. So chances are that this heads a bit higher into the week. If it does head higher, take some liquidity here and then gives us some breakdown here, we'll look to take a trade here, and we're definitely looking for the S&P to start moving from buy side of the curve, which it has been doing here, because like I said, it has taken the inducement level here. It's been taken. It's created these relative equal highs that will later get taken, and two things that we are looking for is for S&P to come back down into this zone here and then go up one more, then head lower. And that's going to be across the whole market. So that aligns with the Bitcoin side of it, where we expect Bitcoin to go down, do that kind of move, then come up here and then head lower. We expect S&P to come back into a demand zone, take liquidity up here and here, and then head down lower. So all eyes on that. For right now, we're looking for price to be on the sell side of the curve here. It's moved from buy side, and we are switching gears. If we just put a vertical line in between there, darken this up, that is your line in the sand basically, of where price has moved from buy now over to sell. So everything that rallies and takes liquidity into levels that we want, we'll look to short down back into a demand zone here and rebalance all of the inefficiency that's lying in this candle here. Right, that's it guys. I'll upload this onto YouTube. You guys can have a look at it later. It's been a bit of a long one, and I will catch you tomorrow.
Thanks, boss.
No problem. Cheers.